All right. Can you all see the question paper?
If you can just pull it closer a bit.
That's okay. Like this?
Thank you.
All right. And then for is it HM Lauzi? Can you also see the question paper?
Yes, I can see it.
All right, perfect. So we're just going through your assignment 3 and just brushing off things like you didn't understand so that at least when you to meet the same questions, you know how to deal with them. Rich, how was your assignment 3, if I may ask? Was it challenging? Was it okay? What do you think? Okay, so we have our question 1, which was marked out of 8, which says Time Traders is a registered VAT vendor and applies the principles of the perpetual inventory system. The following information was extracted from the financial records of Time Traders on 30 June 2024, at which you can see the extract from the trial balance as at 30 June 2024. We had a capital balance of 355,000, and then we went to drawings, which we had 65,000, and then loan receivable 142,610, inventory trading 40,800. And then it goes on to additional information, and it says the following information must still be taken into account for the year ended 30 June 2024. A, during the current financial year, the owner contributed an amount of 48,000. The accountant mistakenly didn't account for it. B, revenue for the year amounted to 384,600. Cost of sales for the year amounted to 292,000, and distribution, administrative, and other expenses for the year amounted to 153,250. And then it says you are required to prepare the statement of changes in equity for the year ended 30 June 2024. So let me see if I can put this on the side so that it becomes easy. Right. So what we have here, we have the statement of changes in equity, at which the thing that we mostly start off with is the balance at the beginning for capital. So in this instance, our balance will be as at, let's see, this is 30 June, let me see, 1 July 2023. So we'll be using this one here. So it's basically balance at the beginning. So you can just record balance as at 1 July 2023. And how much was the balance? It was 355,000. Then you just record it there, 355,000. And then what do you think is the next thing that we need to account for? You guys have an idea of what do you think we need to account for next? So since it's a statement of changes in equity, we are basically dealing with the capital that the owner contributes to the business and things that may affect the capital, such as if the owner decides to take drawings of either money or inventory, they also decrease the capital of the owner. And then also the other thing that can happen is maybe for the year we did our income statement and then we need to figure out, did we make a profit or did we make a loss? If we made a profit, that profit is added to the statement of changes in equity because it's increasing the returns of the owner. And if it was a loss, we need to subtract it because it will also decrease the equity of the owner as well. So the next thing that we deal off with is your capital contribution. Capital contribution. At which, looking at the information they gave us, they said how much is the capital contribution? How much is the capital contribution?
48,000.
48,000. So you add the 48,000 right here. And then the next thing that we need to deal off with is, did the company make a profit or loss when dealing with the income statement? When we did the income statement, did we make a profit or loss? So they gave you the revenue amounts and the cost of sales and also the other expenses amount. So what you do is you say the revenue, which is 384,600 minus cost of sales was 292,000 plus 153, 250. Let's do this. 250. And then if you calculate or punch this in your calculator, you get if the company made a profit or if it made a loss. How much do you get if you punch this in your calculator?
$138,750.
138,750. Is it a profit or it's a loss? Is it a plus or it's a minus?
It's a plus.
It's a plus. So if it's a plus, it means that we made a profit. All right. Did you calculate it correctly? I'm getting negative 60,650.
Let me double check.
Or to not confuse, you can just say 384,600 minus 292,000. The amount you get, you subtract it with 153,250. So whatever amount you get here, you subtract it with this one here.
Yeah, it's correct.
Did you get the amount?
Yes.
Okay. So since it's a loss, you come in and record comprehensive loss for the year. Let me just close the So it's comprehensive loss for the year, which is, you put it in bracket, 60,650. And then the next thing that you deal off with is drawings. So you need to find out how much did the owner withdraw from the company throughout the year, at which they gave us the amount already. You don't have to calculate it. So you say less drawings because drawings decrease the equity of the owner. Less drawings, and then you also put it in brackets, which is your 65,000. Do we understand so far?
Yes.
Okay. And then since we're done with that, now we go to balance as at. Our year is ending 30 June. So it will be 30 June 2024. So I just want you to calculate this for me. So you say this plus this minus this, you get this one here. How much will you get? Just punch it for me. It's 355,000 plus 48,000 minus 650 minus 65,000. How much are you getting?
277,350.
277,350. So this will be your balance at the end of the year. So this is how you deal with your statement of changes in equity. And this is the format as well. So if you get to see it in the future, it's very easy. Just know the format and then also know most of the things they're given. So it was basically an easy 8-mark question that you had to take all of them. Are there any questions before we proceed to the next question?
No questions.
Okay. And for you, sir, do you have a question?
No, I'm good, thanks.
You good. All right. So let us proceed to question number 2, which was your bank reconciliation statement, at which it was marked out of 30 marks. So it says the following information for December 2024 relates to Kulong traders. The following information appeared in the bank reconciliation statement for November 2024. So we have the bank reco statement for 30 November 2024, at which it says we have an unfavorable balance of 24,500 as per bank statement, and then we have outstanding deposits, which is 7.5, and then we have outstanding EFTs, which is also outstanding checks or outstanding payments, which is your 3.5, your 1.8, and your 2,550. And then we have a correction of error, which is 250, and then you have an unfavorable balance as per bank account, which is your 24,600. And then it goes on to say the following appeared in the cash journals but not on the bank statement: outstanding deposit of 3,000, EFT 217 for 1.5 to NCA for stationery purchased, EFT number 210 and 212 appeared on the current bank statement for December 2024. The error made by the bank during November was corrected on the bank statement for December 2024. And then it says the outstanding deposit 205 does not appear in the current bank statement for December 2024. And then it goes on to say an EFT for 3550 was reflected in the Kulong Traders bank statement. This payment was not made by Kulong Traders, but by another client of the bank and must be corrected by the bank. Number 5, a stop order for 800 in respect of the insurance paid to insurers Ltd was cancelled on 30 November 2024. The amount was erroneously entered in the cash payment journal during December 2024. And then number 6 says EFT 215.4.3 appeared twice on the bank statement. Number 7, an EFT payment to solid traders in settlement of our account 4,350. The bookkeeper incorrectly entered the amount as 4,530 in the cash payment journal. And then we have a debit order for the monthly office rent for 4.5. The transaction has not been taken into account in the journals. Number 9 is Kulong Traders made an EFT payment of 9,650 to Qualixia Traders. The bookkeeper incorrectly entered the amount as 6,950 in the cash payment journal. Balances and totals at the end of December 2024. We have cash receipts journal for 224,660, cash payment journal for 216,020, unfavorable bank statement, which is 37,445. And then the following appeared on the bank statement, but not in the cash journals: annual service fee 355, internet service fee 125, cash deposit fee 485. And then you are required to complete the following in the accounting records of Kulong Traders for the month ended 31 December 2024. So which they want us to do the cash receipts, cash journal, your bank account, and then the bank record. And then for you to understand the bank reconciliation on what is really going on and what exactly is a bank record, a bank reconciliation statement is interaction between the business and the bank to say throughout the month on all the transactions that appeared, are our books the same? If I had a transaction on the 5th of 500 Rand, does the bank also have that same transaction? So we send that, they send their bank statement, and then we get to verify and see, okay, throughout everything that the bank recorded, is there anything missing that we either paid or received that the bank doesn't have? If there are such things, then we draft a bank reconciliation statement, which we are now saying, yes, we have received the bank statement, but so and so transactions did not appear on the bank statement, and we would like you to account for them. Because, for example, a bank may send their bank statement on the 25th of every month, and then we get to have transactions which occur maybe on the 30th. So as we do have those transactions in our books as the business, but the bank does not have, because why? They've closed their monthly bank statement for that period. So such things may occur. That's why the bank, we have to draft the bank record so that at least we get to notify both sides to say there is a transaction missing or there is this error and so forth. Do you all understand?
Bottom. Yes.
Okay. So that is basically your bank record. So that's why you see they gave us the cash receipts and cash payment, and then they told you that some transactions occurred and some didn't. So they want you to account for those transactions and draft down the bank record on the ones, because remember, if there is an error that the bank made, we as the business, we are not able to fix that error. But what we can do is notify the bank to say there is an error you made on this date and on this amount. And then the bank will now go and look and rectify that error. But if it's us, the business, who made the error, it's easier for us to go back and rectify it and correct it. Like, for example, let's say like the transaction that they gave you to say, we received 500 Rand, let me say 5,000 Rand from a client, but instead our bookkeeper recorded it as 500 Rand. So you can see it's things that are affecting the business side, not the bank. So we go back to the cash receipts journal and then we record the remaining amount that was not paid. So for example, we received 5,000 and they only recorded 500, which means there'll be 4.5 missing. So we'll go back to the cash receipts journal and we record that 4.5 and then account for it so that our books may balance. But if it is the bank that made this error, we cannot correct it because we are not the bank. What we will do is we'll notify the bank to say there's an error you made. May you please correct it? And then that error will be corrected and shown on the next bank statement to say it was rectified. Easy, right? Now let us put it to practice. Okay. Let's see if I can take this and pull it a bit down. Okay, I'll just put it here. Okay. So they told us that the cash receipts journal had a balance of 224,660. So you go back to your cash receipts journal, which is right here, and then it will be recorded as a subtotal. You record 224,660. And then for cash payments journal, it was 216 and 20. Again, you go to your subtotal, you record 216 and 20. And then this one will deal with it later on. Let us focus on the other two. So let us start off with the cash receipts journal. And we need to look which transaction is affecting the cash receipts journal. So we go back to our question. Let's see. So the following appeared in the cash journals, but not on the bank statement. So these will be recorded in the bank reconciliation. And then they said EFT number 210 appeared on the current bank statement. So you see this 210 and 212, they are right here. So it was transaction that occurred maybe after the bank had sent their bank statement. So now we record in the bank reconciliation so that the bank will add those transactions when they start preparing the next month bank statement. That's why you see now it shows you that EFT number 210 and 212 appeared on the current bank statement to show that the bank has been notified and they have put that amount in the books. So this one, there's nothing we do about it. It's a solved case. And then we proceed to the next one. It says the error made by the bank during November 2023 was corrected on the bank statement for December 2024. It's the one and the same thing. They have rectified the error, they corrected it. So this, we also ignore it. It has been accounted for. And then they said the outstanding deposit 205 does not appear in the current bank statement for December 2024. Again, if you sent a bank reconciliation statement to the bank to show them transactions that they don't have, that they need to account for, and then they send the bank statement and those transactions, they are not accounted for again, you resend them again with the bank record to notify them again to say there's a transaction that occurred. We sent you that you have to rectify and edit, but you didn't. So you send it again until they rectify that transaction or account for that transaction, and then you see it that they've accounted for it when they send the next month bank statement. So which means on this one here, we will need to record it again on the bank reconciliation. So this is BRS. This is also BRS. Then you proceed. Number 4 says an EFT for 3,550 was reflected in the Kulong Traders bank statement. This payment was not made by Kulong Traders, but by another client of the bank and must be corrected by the bank. So in the business world, you may find out that there are similar names or similar company names that at times the bank may mistakenly account a transaction for a company that it wasn't supposed to account for. Maybe you may find out that our company's name is Kulong with an H, and then there's another company that they're dealing with, Kulong without an H. And then instead of deducting a certain amount from this company, they mistakenly deduct it on this one. So it's the same thing that they're talking about right here to say it's a client of the bank. Maybe they sort of have similar names. So instead, the bank made an error of transacting that transaction on the wrong company. So or such an error, you need to record it in the bank reconciliation statement to say you have deducted this amount of money at which it's not a transaction of our business. You need to add back our money and correct the error. So this error can only be corrected by the bank reconciliation statement. Do we understand so far? Do we understand? Are there any questions?
Yes, no questions. Thank you.
No questions. Okay, and then for you, sir? All right. Then you proceed to number 5. Number 5 says a stop order for 800 in respect of insurance paid to Insurers Ltd was cancelled on 30 November 2024. The amount was erroneously entered in the cash payment journal during December 2024. So this transaction is a transaction that was a stop order that had to occur, but we cancelled it. So when we cancelled it, they didn't add it back to what? To the to the cash receipts journal. So cash payment, it was recorded in the cash payment to say we have made a payment to Insurer Ltd, but this payment was cancelled. When we cancel that payment, we need to add back that 800 Rand in the cash receipts journal. Do we all understand? So we will proceed and then go to our bank record, and then you record, cash receipts, and then you record Insurers Ltd, you record the 800. Do you understand?
Yes.
Okay. So since we're done with number 6, we proceed to number 7. We proceed to number 6, we're done with number 5. Number 6 says EFT 215 for 4,300 appeared twice on the bank statement. So which means the bank deducted this 4.3 twice from us. We are not the ones that are able to rectify this error because we are not the ones that made it, but the bank. So what we'll do is we'll record this transaction in the bank reconciliation statement so that they can rectify that error and give us our money back. So this one we'll deal with in the bank record. And then we proceed to number 7. Number 7 says an EFT payment to solid traders in settlement of our account 4,350. The bookkeeper incorrectly entered the amount as 4,530 in the cash payment journal. So if you can recall from last week's class when I spoke about undercast and overcast, but I'll repeat it for say also to understand. So in accounting, there are errors that are called overcast and undercast. Yeah, I want to see if you are listening. May you please answer this question for me? May you please explain it to say for me what's the difference between the two? What's the difference between an overcast and an undercast? I'm waiting for you. Since you didn't do my homework, may you please answer this one for me?
Who didn't do the homework? Me.
Yes, you. You. I'm waiting for you to explain to say what is an overcast and what is an undercast.
Okay, it's I think it's an error. Okay, actually, I'm reading about it now. An error where the total of a ledger or book is understated,
Okay,
while
so
an
mhm.
overcast is the opposite. Is an error where the total is overstated. So it's an undercast is where the ledger of book is understated, and then an overcast is where the error is overstated.
Okay. All right. Do you understand?
Yeah, it makes sense. Yes.
Okay. An example would be for if it's an undercast, how do you see that this is an undercast? How can you notice that there was an undercast?
No, the book's not balancing.
Okay. All right, but when it's dealing with the bank reconciliation or any other transaction that they may show you that there was an undercast, like for example, they may say that we received 9,000 rands from a client, right? And instead our bookkeeper recorded it as 6,000. This is an undercast. So which means that you will need to record again that 3,000 so that it balances to 9. And then if it's an overcast, a client paid us 9,000 and then you mistakenly record it as maybe let me say 19,000. So this is an overcast where we need to record the 10,000 and remove it because it's an overcast. Like if this was a cash receipt journal, it means that our cash receipts will be more with 10,000. So in order for us to balance it, we will record that 10,000 in the cash payment journal so that our books balance. Now our cash receipts won't be over by 10,000 because that 10,000 will subtract it in the cash payments journal. But then if it's an undercast is recorded in the same journal that it occurred. If an undercast occurred in the cash receipts journal, it is recorded in the cash receipts journal. If it was made in the cash payment, it is recorded in the cash payment. It's only an overcast whereby you need to record it in the opposite journal. At which here the opposite journal of a cash receipts is cash payment. Do we all understand?
Yeah, no, understood.
Okay. So now we go back to our question number 7. It says an EFT payment to solid traders in settlement of our account of 4,350. The bookkeeper incorrectly entered the amount as 4,530 in the cash payments journal. So is this an overcast or an undercast? Is it an overcast or it's an undercast?
Mm. Is it not an over? It appeared twice, right?
No, this one. We're doing with the other one. This one here.
Oh, okay. An EFT payment too. Mm. Is it still not over? Is it under? It's over
Okay.
because
Mm-hmm.
she still paid more. The
Yes.
bookkeeper.
Okay. So they said the amount that we officially paid to settle our account, we're owing someone, and then the amount that we're supposed to pay is 4,350. But instead, our bookkeeper made a mistake and recorded it as 4,530. 30. So which means it's an what? It's an overcast. Because it's more than what we actually paid for. So now you need to find out the difference between 4,530 and 4,350. And then that amount you record it in the cash receipts journal. So if you subtract the two amounts, how much difference will you get?
It's 4532
Minus 4350.
180.
180. So, okay, that error, you record it in the cash receipts journal, which you record 180, and then you say error plus what error can record it either as error made, then you can say overcast. So which means we are done with the cash receipts journal. We just need to add up the amounts, which is 224,660 plus 800 plus 180. How much will you get?
It's what we're minusing all these amounts.
No, we're adding all three of them.
Oh, we're adding all three of them.
Yes.
Let me open. I'm actually on my phone. Let me just open here.
Okay.
Yes, Nkulago is still there. Maybe you can assist. My laptop is still running.
Okay. Can you hear us? Okay, let me just punch it in. So it's 224,660 plus 800 plus 180. I'm getting 225,640. So this will be your total amount for cash receipts journal. So that's the one that you record in your bank, but we do it afterwards. For now, let us deal with the cash payments journal. So the cash payments journal, the first thing that you can start off with is your bank charges. In which on number 11, they told you that the following appeared on the bank statement, but not in the cash journals. So all three of these, we call them bank charges. And then another tricky thing that you need to understand, they gave you three, and then here they might write that there was, what's the term that they use? Bank overdraft. If it's a bank overdraft, it's a separate account. You don't add that amount and make it part of bank charges. A bank overdraft, you record it as a bank overdraft on its own in the cash payment. It is not part of bank charges. So always make sure they may record it there, and then you get confused and add all four of them thinking that it's bank charges. Bank overdraft, you record it on its own. So here we record bank charges. Charges, which you add 355 plus 125 plus 485, which you'll get 965. So that will be your bank charges. And then we proceed. Let's find what's the next thing affecting cash payments. Let's start from number 1. Okay, number 1 is bank reconciliation. Number 2, it's done. 3, done. 4 is BRS. 5, we did it. 6, with BRS. 7, it was cash receipts. And then number 8 says A debit order for monthly office rent, 4.5, the transaction had not been taken into account in the cash journals. So if it's a debit order, it means that it's us paying. So we need to record this rent amount in our cash payments journal. So you come to your cash payments and then you record what? Rent expense, which is 4,500. And then you come back. So this one is done. And then number 9 says, Kulong Traders made an EFT payment of 9,650 to Qualixia Traders. The bookkeeper incorrectly entered the amount as 6950 in the cash payments journal. So this one is an undercast. In undercast, you record it in the same transaction that it occurred. So you say 9650 minus 6950. It will be 9650 minus 6950, which I'm getting 2,700. So this was an error that was made by our bookkeeper. So you go back to your cash payments journal and then you record Qualixia Traders. Transaction, you can either record it as a transaction error or you can record it as an undercast. And then you punch in the 2.7. So now we are done with the cash payment. We just need to add all the amounts. So it will be 216 and 20 plus 965 plus 4.5 plus 2.7, which I'm getting 224 185. Do you have a question so far? Do you have any questions?
No, all good.
Oh, good. All right. If you don't have any questions, then you proceed to the bank. So we need to go back to number 1, where they told us that we had a unfavorable bank balance of 24,600. And remember, a bank is an asset, right? Do you all agree? A bank is an asset to the business. Okay. And we know that assets increase on the debit side and decrease on the credit. So which means if it's decreasing on the credit and they told us that we have an unfavorable balance for bank, which means it's on the credit side. So you come and record your 24,600 on the credit side because it's a negative amount. Here you record 0 because it's not a positive amount. And then since also on bank, minus represents money coming out and then plus represents money coming in. The cash payments journal, it will be money that you paid to other people or other businesses. So which means according to bank, it is money that went out of our business bank account. And then cash receipts journal, it is money that we received in our business. So which means it's money coming in, it's a positive amount. So on the credit side, you record total payments. Total payments, which is your cash payment journal. Then you record this amount that we calculated here, which is your 224,185. And then you come to the debit side, you record total receipts, which is your cash receipts journal, which is 225,640. 225,640. After having done that, you need to find out, according to when you look at the debit side and the credit side, which side is more than the other. So we start off with the credit side. If we say 24,600 plus 224,185, I am getting 248,785, which means that the debit side is more than the credit side because the debit side is 225,640. Then now we will say 225,640 minus 248,785, at which I'm getting 23,145. So that will be your balance carried down. So that we need to balance off this T account for bank. So you record here 23,145, at which if you add all this plus this plus this, it will give you this 225,640. Should be a 225,640. And then here you record 0. And then you go down your balance, because remember, balance carried down will move to the other side of the, if it was a debit, it will move to the credit. If it was a credit, it will move to the debit. So since here it's from the credit, it will move to the debit side. You record 23,145. Here you record 0. So which means for the next month, when we are starting off a new month transaction, our bank account is now a favorable balance. It's no longer a negative, but it's a favorable balance. It's a positive one. Do we have any questions? You're all good. All right. Since you're all good, then you proceed to the bank reconciliation. Where did I put it? Let me just see. Okay, where did I put it? Where is it? Where is it? Where is it? Oh, here it is. Okay. So now we have our bank reconciliation statement, and then we have the balance as per bank account, which is a positive amount. You record it as it is, which is 23,145. And then outstanding deposits, we go back to our questions. They told us that number 2, which is this one, the following appeared in the cash pay journals, but not on the bank statement. Outstanding deposit of what? 3,000 plus. They told us that the, where is it? Okay, the outstanding deposit number 205 does not appear in the current bank statement. So which means you take this 7,500 plus this 3,000 to get your total outstanding deposits. So it will be 7.5 plus 3,000, which will be 10,500. So this will be your total amount for outstanding deposits. So these are your outstanding deposits. You need to take that amount. And since outstanding deposits, it's a credit balance, because remember, when it comes to the bank, if we have a favorable amount in the bank, to the bank side, it's a liability because that money is not theirs. And then if we have a negative amount in the bank, to the business, to the bank, it will be on a debit side, meaning to say we are now a debtor to the bank. So for example, let's say our bank account has a negative 5,000. And then according to our books, this is a credit amount, right, on our bank statement, on our bank T account. Right? But then when it comes to the bank statement, this amount will be on the debit side. Why? Because we are now a debtor owing the bank 5,000 Rand. So that's why it will be on the debit side. And then if we have a positive 5,000 Rand in our bank, it will be on the credit side. It will be on the credit side
Of the bank.
Yes. So that one is pretty easy, right?
Yeah, it's
Okay.
easy.
All right. Then we'll go to our outstanding deposits, and then we record it as a negative 10,500. And then outstanding payments is us paying So which means on our side, it will be on the credit side, but on the bank side, it will be on the debit side. So we need to look at transactions that are dealing with payments. So they told us that EFT number 217 for 1.5 to NCA for stationery purchased was not in the bank statement. So we have that 1.5. And then they told us that EFT number 210 and 212 appeared on the bank statement, which is this one and this one. So the other one did not appear. So you edit. Okay, let me just do this 2550. And then do we have any other payment that did not appear? I'm only seeing those two. So if it's those two, you just add the amount, which is 2550 plus 1.5, which you get 4050. Are we all getting the same amount?
Yes.
Okay. So now we go to our outstanding payments. Outstanding payments said on the bank side, it will be on the debit. So you record it as it is without a negative, which is your 4050. And then you move to correction of errors. And then we go back to our transactions. Then we find out which errors do we have in the bank record, at which they told us that the error of this 250 appeared in the bank statement, right? It was corrected, which here, right here, the error made by the bank during November was corrected on the bank statement. So which means this one is done. Now we need to look for a new error that either the bank made, at which there was one that they spoke of. Where did I put? Okay, let me just do this. Yeah, here it is. Okay, so number 6 says EFT 215 for 4,300 appeared twice on the bank statement. So if it appeared twice, it means that we made a payment of 4,300 to someone, but instead the bank recorded that amount twice. Meaning to say the bank has to add that amount back that they entered twice and then leave the one that we made the correct payment for, which is 4.3. So we'll go to our bank record. Correction of error, we put a minus because we want the bank to add that amount back. It will be 4.3. And then they told us that the balance per bank statement it was given, which was an unfavorable balance of how much? 37,445. An unfavorable balance of 37,445, which means that on the bank side, that amount will be on the debit side, 37,445. So when you add these things, it should be this plus this. How much will it give you?
What's the 4.3 plus 27,445?
37,445 plus 23,145.
37,445 plus 2 plus what?
23,145.
2, 2, 3, 1, 145. Is it 65.90?
Okay, let's see. Okay, let me see. So the debit amounts that we have is this one and is this one. Let's see, 37,445 plus 23,145 plus 40,50. Okay, let's see. Let me see something. 64, 640. 10. Is it correct? So it's debit. Yes. Outstanding payments. Okay. Correction of error. And balances pay that. Okay. Plus 3745. Okay, let me see on outstanding payments, because I think it should be the balancing figure. Okay. Because we have our debit balance of bank, which is 23145, and then outstanding was 10,500, and then we had outstanding payments of 4050, and then the correction of error, which they entered it twice on the bank statement, and then the balance. I think the balancing figure would be this one here. This reason being there may be other payments that okayed that they didn't show on this one. So mostly what happens is on such transaction, you need to calculate other parts before you get to the final part, so that that final part will be the balancing figure for you. For example, we had the balance per bank account, which we calculated and we got it. And then we have our outstanding deposit, which was the 3,000 plus the 7,500, which we got the 10,500. And then the correction of an error, it was a payment that was entered twice. So we need to add the other part, which was the 4.3 back, to show the bank that they need to add that amount. And then the balances per bank statement, it was given, which was an unfavorable balance, which will be on the debit side. So if you say 23,145 plus 37,445, how much will it give you? And then also say 10.5 plus 4.3. How much will it give you? How much are you getting?
Okay, 23,145.
On which one? Yeah, 23,145 plus 37,445.
37,445. I am getting 65,90.
On which one?
The bottom one, 23,145
Okay,
and 37,445.
so
Then it's
60.
65,90.
Okay.
And then the top one is hello,
Yes, I'm here. I'm waiting for the top one.
14. 14,8.
14.8.
Yeah.
14.8. Okay. There's something wrong somewhere, somehow. Let me see something. There's an error when we calculate it. Yeah. We made a mistake on the bank.
Wait. Okay.
Because the credit side was more than the debit. I'm seeing, man, this thing, why is it not balancing?
Okay, so the credit is more.
Yeah, because there we have 24,600 and 224,185, which already, if you add these two, it will be more than, because this side is 225,640. So already, if you add this 24,600, it's gonna be more than this one. That's why we made the error.
Okay,
I'm
so
being
the credit side of the bank
is more. So which means this 23,145 is supposed to be this side, not the other way.
Oh, okay.
So which means here it will be 23,145, which will be 248,785, 248,785, and then here it will be 0. And then we need to erase this one here. Then put a 0. So yeah, the credit side was actually more than the debit.
And the debit.
And I'm seeing on the bank record, why is it having funny amounts? So which means now this one here becomes a negative, which becomes negative 23,145. And then this one will be 40,50. Now if you punch this, it will be balancing.
My laptop closed.
So, okay, let me just balance it off for you. So we have 23,145 plus 10,500. Plus 4.3. Which I'm getting 37,945. And then if you say 37,445 plus 40,50.
37,445 plus 40,50.
Yeah. Let me just verify something. All right, just give me a moment. Okay, are we all here?
Hello? Yeah, no, we're still here.
There is a transaction number 4, okay, which we left out. An EFT of 4350 was reflected in the Kulong Traders Bank statement. This payment was not made by Kulong Traders, but by another client of the bank. We left that one out, which means it's part of an error that occurred from the bank. So this amount we need to add with this one here, the 4.3. So if you say 3.550 plus 4.3, how much do you get?
4.3 plus 4.550.
Plus 3.550.
Okay, 4.3 plus 3.550. It's 78850.
7850. Okay. Now let's say 23 145 plus 10 500 plus 7850. How much do you get?
10 500 plus
50 plus 23 145.
50. It's 20. I made a mistake. 23 145.
No.
4,195.
How much do you get?
4,195.
41495. Because I think maybe there's somewhere where you made a mistake. So it's 23145 plus 10,500 plus 7850. So you're supposed to get 41,495.
Yes.
And then now you say 37,445 plus 4050. How much do you get?
Same amount.
Same amount, which is 41,495. So that means your bank record is balanced. Everything is correct.
Mm.
So it should always balance. If it doesn't balance, just know that there's something you left out or there's something that you...
Mm.
Do you understand?
Yes, if it doesn't balance, then somewhere they calculate, there's an error in the calculations.
Yes, it's either you made an error or it's either you left out a transaction. Because it should always balance. If it doesn't balance, you need to go through everything again and see, did you account for every transaction and did you record the correct amount? Do we have any questions?